the truth about credit scores, how to fix and build your finances. Welcome to another episode of WealthRise, your trusted platform for taking control of your financial future. At WealthRise, we're here to empower you with the guidance, tools, and support you need to rise financially. Whether you're looking to improve your credit score, create a budget, or make smart investments, we provide the resources and expert advice to help you build a strong financial foundation. If you're ready to elevate your finances, be sure to like, share, comment, and subscribe for more valuable insights. In today's episode, we're diving into a crucial topic, the truth about credit scores, how to fix and build your finances. Your credit score impacts nearly every part of your financial life, whether it's securing loans, getting favorable interest rates, or even renting an apartment or landing a job. Despite how important it is, many people still don't fully understand what a credit score is or how to improve it. That's why we're here to break it down for you. In this episode, we'll walk you through the truth about credit scores, share practical ways to fix and build them, and provide actionable tips to help you on your journey to financial freedom. Let's get started. What is a credit score? Your credit score is a 3-digit number that reflects your creditworthiness. It is based on your credit history and helps lenders determine the risk involved in lending you money. The higher your credit score, the more likely you are to be approved for loans and credit cards, and the better your chances of getting favorable interest rates. The credit score range. Credit scores typically range from 300 to 850 with the following categories. Poor, 300 to 579. Individuals in this range may have difficulty getting approved for credit and may face high interest rates if they do. Fair, 508 to 69. You might be approved for credit, but you'll likely pay higher interest rates. Good, 677 and 39. Lenders view you as a reliable borrower. You can often secure loans with reasonable interest rates. Very good, 740 to 99. At this level, you're considered a low-risk borrower, and you may receive even better interest rates. Excellent, 800 to 850. Individuals in this range are considered to have excellent credit, making them eligible for the best terms on loans and credit cards. How is your credit score calculated? Credit scores are determined by a variety of factors, primarily focusing on your credit report, which details your borrowing history. Here's a breakdown of the main components that contribute to your score. 1. Payment history, 35%. Your payment history is the most important factor in determining your score. Lenders want to know if you have a track record of making on-time payments. Late payments, defaults, and bankruptcies can significantly impact this portion of your score. Example, if you consistently pay your bills on time, your score will rise. However, if you miss payments, your score will drop, especially if those missed payments are recent. 2. Credit utilization, 30%. This refers to the amount of credit you're using compared to your total available credit. Lenders typically prefer to see a credit utilization ratio below 30%, meaning you're not maxing out your credit cards or lines of credit. Example, if you have a credit limit of $5,000 and you're using $1,500 of it, your credit utilization is 30%. If you increase that balance to $3,000, your utilization jumps to 60%, which could negatively affect your score. 3. Length of credit history, 15%. The longer your credit history, the better. A long history shows that you have experience managing credit, which makes you less of a risk to lenders. Example, if you've had a credit card for 10 years and have consistently made payments, that will positively impact your score. If you're new to credit, your score might be lower until you establish a longer track record. 4. Types of credit in use, 10%. Having a mix of credit types, such as credit cards, mortgages, and car loans, can improve your score, as it shows you can manage different kinds of debt responsibly. Example, if you only have credit cards, adding an installment loan, like a car loan or student loan, could enhance your score by demonstrating your ability to handle diverse types of credit. 5. Recent credit inquiries, 10%. When you apply for credit, a hard inquiry is made, which can temporarily lower your score. If you have many recent inquiries, it may indicate that you're financially desperate or overextending yourself. Example, If you apply for 5 credit cards in a short period, each application will lower your score by a few points. However, if you limit your credit applications, the impact on your score will be minimal. Why does your credit score matter? Your credit score affects many aspects of your financial life. Here's how. Loans and mortgages. A higher credit score increases your chances of being approved for loans and mortgages, and it can help you secure lower interest rates. Credit cards. Your score affects your eligibility for credit cards, including rewards cards, low-interest cards, and cards for people with poor credit. Car loans. Your credit score plays a significant role in determining your interest rate for a car loan. A higher score can mean substantial savings over time. Renting an apartment. Many landlords use credit scores to determine if a potential tenant is financially responsible. A poor score may make it harder to rent a home. Employment opportunities. Some employers check credit scores as part of the hiring process, especially for jobs that involve financial responsibilities. How to fix your credit score. If your credit score is less than stellar, don't worry. There are steps you can take to fix and rebuild it over time. 1. Check your credit report. The first step in fixing your credit score is to check your credit report for any inaccuracies. Sometimes, errors like incorrect payment information, accounts that don't belong to you, or outdated details can negatively impact your score. By identifying these issues, you can dispute them with the credit bureaus to have them corrected. Example, you may find that a payment you made was reported as late, even though you paid on time. By disputing this error, you can have it removed, potentially improving your score. 2. Pay bills on time. One of the best ways to improve your credit score is to start paying your bills on time. Late payments can stay on your credit report for up to 7 years, so it's essential to be consistent. Example, set up automatic payments for bills like credit cards, utilities, and loans, or use calendar reminders to ensure you don't forget. 3. Reduce your credit card balances. As mentioned earlier, credit utilization plays a significant role in your score. Try to keep your credit card balances below 30% of your credit limit. If you're already above this threshold, pay down your balances as quickly as possible. Example, if your total credit limit across 3 credit cards is $6,000, aim to keep your total balance under $1,800. Paying off outstanding balances will help improve your utilization ratio and boost your score. 4. Avoid opening new credit accounts. Every time you apply for credit, it results in a hard inquiry, which can temporarily lower your score. Opening new credit accounts frequently can harm your credit over time. Instead, focus on managing the credit you already have. Example, if you're considering opening a new credit card, only do so if you have a specific need and plan to manage it responsibly. 5. Work with a credit counselor. If you're struggling with your credit, a credit counselor can help you create a personalized plan to improve your score. They can negotiate with creditors on your behalf, help you create a budget, and provide education on managing your finances. Example, a credit counselor might help you consolidate your debt through a debt management plan, which can lower your interest rates and make payments more manageable. How to build your credit score. Building a good credit score takes time, but it's possible if you take the right steps. 1. Start with a secured credit card. If you have no credit or poor credit, a secured credit card can help you build or rebuild your score. With a secured card, you make a deposit that serves as your credit limit. Using the card responsibly and making timely payments will help improve your score. Example, if you're approved for a secured card with a $500 limit, use it for small purchases and pay off the balance in full each month. Over time, your credit score will improve. 2. Become an authorized user. If you have a friend or family member with a good credit history, ask them if you can be added as an authorized user on their credit card account. This allows you to benefit from their positive payment history. Example, if your parent has a credit card with a 15-year history of on-time payments, being added as an authorized user can help boost your score, as the account's positive activity will appear on your credit report. 3. Take out a credit builder loan. Some financial institutions offer credit builder loans, which are designed to help people with limited or poor credit histories. With these loans, You borrow a small amount of money and repay it in installments. Your payments are reported to the credit bureaus, helping to improve your score over time. Example: a local bank might offer a $1,000 credit builder loan with a 12-month repayment period. By making regular, on-time payments, you can improve your credit history. Number 4, monitor your credit regularly. Regularly monitoring your credit can help you stay on track and spot potential problems early. Many services offer free credit score tracking, allowing you to see how your score changes over time and what factors are impacting it. Example: signing up for a free service like Credit Karma can give you regular updates on your score and show you the factors that are affecting it. Conclusion: by following the steps outlined and using resources like WealthRise, you can begin the process of repairing and building your credit score. While it may take time, consistent effort and the right knowledge will set you on the path to a healthier financial future. Remember, financial success is a journey. Take it one step at a time. Now that you have a clearer understanding of credit scores and how to improve them, it's time to take action. At WealthRise, we are committed to offering personalized financial strategies that cater to your unique needs. Our platform provides easy-to-follow guides, expert tips, and the support you need to make confident financial decisions. If you found this episode helpful, be sure to like, share, comment, and subscribe to WealthRise for more valuable insights. We're here to help you rise and unlock your full financial potential.